Hey YouTube, Mikey again. Welcome back to my channel. I wanted to give you an update about some VA loan options you have at the end of your forbearance. I know I briefly talked to you about forbearance, requesting forbearance prior if you need it. Highly recommend anyone in a scenario that is struggling with money due to COVID, request forbearance. It's a chance for you to sit here and keep the roof over your head, have food on the table. It's a great opportunity to help you and your family. I digress. I wanted to break down what happens at the end of those 6 months, though. So, I have some information here of different options that you can go about at the end of your 6 months of your forbearance. I'm going to go over briefly extending the forbearance, which is an option because you do have the option of going into a year, but I'll go into that in a moment. You have different loan modifications you can take. You can reinstate it and you can do a payment plan. So I'm going to go over each of those and hopefully this helps. So, first, extending your forbearance. You do have the option at the end of your 6 months of your normal forbearance of extending it an additional 6 months. Now, different banks are doing this differently. Example being Navy Federal is actually doing it where you can only extend it for an additional 3 months, but they'll give you the option to do another 3 months at the end of 3 months if you're still affected by COVID and you need the additional help. So it's really nice. It takes not much more than a phone call, just letting them know that yes, you are still affected by COVID. You're asking for another 3 month extension, and then rinse repeat at the end of the 3 months if you still need forbearance. The next option is reinstatement. Now, this one I don't see too many people going with, but different people have different scenarios. This one is everything that you haven't paid for those 3 months, 6 months, however long your forbearance period was, you pay it in full. So you just reinstate your loan, you pay it in full. There's not much more information to that. You just literally whatever you owe. If you owe $6,000, $1,000 per month that you miss, you pay $6,000 and that's it. Done. I don't really like that option because if you couldn't pay your mortgage before, what makes you think you can pay 6 months of this mortgage plus the month that's due? So it's a total of 7 months. So keep that in mind. Next one is the repayment plan. This one's a bit more interesting. I did talk about this in the prior video. You make an additional payment. Example being let's just say for number sakes, your mortgage is $1,000. You miss 6 months of payments due to forbearance. So the bank will sit here and give you 6 months of catching up. So what you'll do is you'll make your one of your missed payments plus your current mortgage, and slowly you'll bring it up by paying both of them, both the missed payments plus your normal mortgage, and within 6 months you'll be caught up. This might actually work for some people who were furloughed or just getting back into work. Different banks, I've seen the options being 3, 6, 9 months. You have to get with your bank to get an exact number, but this might be an option for some people. Now I go into the different modifications, the loan modifications. I still don't know what the negative long term effects are for loan modifications, but some of these are interesting. So I'm going to go over the first one, which is extended mod. Extend the amount of the loan by the months missed. So sorry, let's say you missed 6 months, or let's say you missed a year and you had 25 years left on your mortgage. So now you'll just have 26 years. So it literally just extends your mortgage by an additional whatever the forbearance period is. So that's an interesting option. So the cap and mod option that you have for your loan is actually very interesting as well. It so you have to keep in mind when you have a loan, you're not just paying down your loan, you're paying other things as well every month. So you have your principal, which is what you're paying down on your loan. You have your interest, which is charged for them giving you the loan. But then you also have your taxes and insurance, which are normally thrown into an escrow account. Now, the bank's been paying these since you haven't, but they're still due at the end of the year, which can increase your loan amount. So when you end forbearance, you still owe that money. So what the cap and extend mod actually does is it throws that amount that you owed. So let's say you miss, again, we'll go with the 6 months, you miss $6,000 worth of payments. Just for round number sakes, let's say half of that was actually interest. I don't think you incur any interest. I'll figure out the interest part and make another video about that. So we'll just, for argument's sake, say taxes and insurance. Because I know for sure those two are still going to be due. So let's say the other $500 of that $1,000 owed was taxes and insurance. What they do is they take that amount you owed for the 6 months. So since it's $500, that's totaling $3,000 for the 6 months. They add that to your principal. So you don't have to pay it all up front, or your mortgage doesn't go up a huge amount when you start paying again. So that's a very interesting option. If I had to take a modification from these two so far the cap and extend mod is going to be the best one. The third one is called Flex Mod. Now, this one I'm gonna have to read from because I'm still trying to understand it, but it allows you to add unpaid balances from the forbearance period and then extend your mortgage term by 40 years, which also will lower your interest rate to market levels at that time. So it's not saying any specific interest rate. The lower the interest rate, the better it's going to be. So, to my understanding, when I ask the questions, I do know that if your interest rate is lower than the current market, then your interest rate will stay the same. Again, get with your lender. They will be able to give you more information on this. The part that I'm waiting for an answer on is it says it's going to extend your mortgage term by 40 years. So, does that mean if I still, let's say you just got a mortgage, you owe 30 years. So now am I paying my mortgage for 70 years? Or is it extending it to 40 years total? So adding an additional 10 or 15, depending how much your loan has been paid off. I am waiting for more information on that. I did request some more information. That's for the Flex mod. As soon as I have that, I'll make a video just on Flex mod. That might be the best scenario, mainly because one, you're extending your loan, so your payments are going to be lower, but it could also lower your interest rate. So if you're at a 3 or 4% interest rate, your interest rate would actually go down. So those are going to be the different options you have. Went over extending your forbearance, reinstating your loan, repayment plan, cap and extend mod, regular extended mod, and flex modification. Every time I say mod is for modification, I just shorten it. Biggest thing is get with your lender. See what options they're giving you. These are some options I know are available for VA loans. So this is going to be really good information. At least you have to present to them like, hey, I heard this, I heard this. What options are you going to give me? The more information you have before approaching these lenders, the better you're off you're going to be. Hopefully, you have a lender that gives you all this information up front. But if you don't, now you have some of this information. If you have any questions in regards to this, any questions in regards to the VA loan, you can contact the VA. You can contact your lender. Contact me. I'll give you what information I have. I'll print these out if you need them. Send them to you PDF. Whatever you need, I am here to assist. Anyways, everyone, thank you for joining me on my channel today. I hope this helps someone out. Have a wonderful day.